All right, let's get into it. Here are my 3 top stocks to watch this week. That is March 11th through March 15th. So real quick, right away, these 3 stocks that we'll be watching are 3 stocks. Their share price has recently suffered substantially, so they're pretty much getting hammered recently. Bears have taken control, so these are 3 contrarian investment opportunities. It's the way I like to trade and one of my most successful trading strategies. So now let's get into the charts. Okay, so here we are on the TRVG chart. The first thing I noticed when I looked, I saw this gap down and how ever since then it has acted as a resistance here for in the recent future, right? You can see it's come up here quite a few times. Really more like 630 is the level, but we'll just leave that for now. And the other thing I saw is I think it's been trading in the channel actually, and given what happened this past week with the market testing 2800 and just having some weakness right after, exhibiting some weakness, you can see that right in the channel below. Now it's trying to get above the channel again and stay here. The reason though that I have a entry below 5 is we have to keep an open mind that this market weakness could continue into this week, and if it does, if we can remain patient, we might be able to get it 440 like we said, right? This area here. And if we can get it for 440, I mean, that would be phenomenal, right? Not saying we will, but we just have to keep an open mind. And then our stop loss would be if it breaks this all-time low here at 406, so $4 would be where we would exit. And again, 630 would be my exit as well on the top side. So TRVG is one that we're keeping a close eye on. Not all the way bullish there yet. Got to do a little more research, but we are watching this one. Okay, guys, so here we are on the TRVG website. Another quick tip I want to show you guys, if you don't know already, whenever you're looking for information on a company, instead of going all over the Google and searching all over the place for stuff, you can always come to the regular company website, TRVG.com. Sometimes it's hidden in plain sight, but you can always find it. With TRVG, you go down here, you hit the investment relations, and here you can find all of the financial information, all the recently earnings release, investor presentations, all of that stuff. So sometimes it's better just to come here straight to the company website and see what's going on. And the reason I bring that up is because I want to talk about TRVG and their turnaround story. So TRVG, as we talked about, on that, they sell they're in booking and online services, so they're changing their business model. They were spending a lot of money right on advertising, and they're focusing more on profitability as opposed to growing sales. And you can see that here on one of their presentations, like I showed you from the investment relations section of their website, that's already happening. So operating expenses are going down. Adjusted EBITDA is a metric that is used in the industry. It stands for earnings before interest, taxes, depreciation, and amortization. It gives us a clear indication of a company's core ability to generate revenue without, if we strip it of its market structure or its capital structure and taxes, tax bracket, and all that stuff. So if we look at their appendix here, you can see this follows up again with what we talked about with their cost of goods sold from 2017 to 18 has actually gone down, right? And then when we look at SG&A, which is selling and marketing, like we talked about again, it is down substantially, 15%. So they are taking the approach that they're gonna spend less money on trying to grow what's considered the top line number, which is this number, and it is declining quite substantially, and they're more focused on growing net income. So that is the turnaround story for them. Here is their guidance for 2019. So they expect total revenue, as we talked about, to decline in the first half, but significantly make a turnaround by the second half, going towards the second half, and they expect revenue growth to return to growth in the second half, and they've given guidance of adjusted EBITDA, the metric we talked about, to be between 50 million to 75 million. Okay, second on the list was Pollo Loco. So again, guys, instead of going all around Google and stuff, we're at the Pollo Loco website under Investor Relations. Their website's actually in. You can see it right when you go on the website at the very top. See Investors, Financial Press Releases. So what happened with Pollo Loco? They actually released excellent numbers to close out 2018. They had an initiative that they began a while back to bring same-store sales growth back to where they wanted it. So they've actually been hitting on their initiative. As you can see, same-store sales increased 4.4%, increasing a 3.7% increase and 5% for franchise-owned restaurants. On a pro forma basis, they came in at 16 cents per share compared to the 11 cents per share that were expected. So you can see top line as well, 6% growth. However, that is not what hurt Pollo Loco. It's actually very interesting. Pollo Loco shares tumble from a wet weather forecast. So I live in sunny California, and it has not been sunny California here. And Pollo Loco is one of the restaurants that is suffering from the bad weather here. They are blaming their start of the year and their full year number on 2019 on historical cold temperatures here in the Southern California area. And if you think I'm lying, we're going to take a look here. So the company shares fell Friday as much as 17% based on their guidance. Their guidance was down 70 cents to 75 cents per share. You can see here, guys. And FactSet estimates, analyst estimates we're expecting 80 cents per share for the same year. So you can see the CEO here as well. I don't think we could have envisioned at the start of this fiscal year what we're approaching in record rainfall in Southern California. So the company, again, as I mentioned at the start of the video, has 80% of its restaurants in the state. And he also said it was the coldest February in 60 years. I live here, and let me tell you, it has been one of the coldest winters I can remember in my lifetime. So Pollo Loco is also suffering from the cold weather. However, as we get into the chart, you'll see why I think this is a great opportunity and is one of my favorite stocks for the week. Here we are, the Pollo Loco chart. So as we talked about, look at this, guys, 17% down, got hammered on Friday, came all the way here to this level. So again, we'll get back into my price targets, right? And I know you guys probably like, what? Didn't he say 1140? What's up with this? So again, keeping an open mind that the market could continue to go down. You can see that the next level, the next key area would be way down here above 11, right? I would take a position here at 1140 if, in fact, it did go down. I'm not saying it will, but if it did, that's about the area that I would like it. However, you can see for those people that don't like technicals or say technicals, blah, whatever, here it is. Came all the way down. It's testing this 1240 line. So you can see it used to be old time resistance before this huge breakout into the stock. And now we are there. If the market can just not head down, if we can just not get any more downward momentum, I would love to take a position in this stock. Again, they lowered guidance by 5 cents or so, and they're just playing catch up on the year based on the bad weather here in California. They have a few new restaurants that are about to open. Bad news, yes, but does it merit a 17% drop? I don't believe so. This is one that I might be looking to buy this week, and I will make an updated video during the week to see if I got a position. I'm hoping this stock can just go back to $14 here. For those of you guys, more savvy investors, savvy traders, if you look at the options on this thing, I was looking out, as far as June, they're down like 50% to 80%, some of the option pricings on the calls. So take a look at those guys. So there you have it, Pollo Loco. All right, guys. The last company we're going to talk about is MAXR Technology. Full disclaimer: I do hold a position in this stock at 554, and I already had a very successful trade on this stock earlier this month. So full disclaimer: I'm just looking to get back into it again. So let's get into it. Big picture: what's going on with MAXR? Their satellite business had this satellite come crashing. They had to take a loss on it. Long story short, it created a lot of headwind pressure for them, a lot of bad news. They had a bad quarter. But on a positive note, the satellite's fully insured. They've come and restructured that business line. They're going to be running smaller satellites. And they've taken some initiatives to kind of change in which direction the company is going in. The first thing I want to talk about is they brought in a new CEO. So they have these slides on their fourth quarter presentation, right? In the last 45 days, what they've done, they brought in a new CEO to lead this initiative, which is something that I do usually like when they change out management. They reduced the dividend, so to preserve cash. And this is important because one of the biggest headwinds for MAXR, one of the big, the most negative things about it is that they have a lot of debt. And recently, their debt rating was decreased based on some of their debt rating metrics. They could be pressured from their ability to, cover their debt based on their revenue taking a dip because of one of their satellites going down. So that's the big picture here. And it's just one business segment that's doing bad. When you look at their other business segments, they are seeing some growth. See, this is the one that's doing really bad. Like I said, it's down 9%, is down 10%. In every metric, right? And you can see here's the impairment, the goodwill impairment, and the loss on the satellite. So these huge non-cash accounting transactions created this this negative, it doesn't even look real. A loss of $16 per share. But again, there are other business segments, as I mentioned. Here it is. The acquisition of Digital Globe, revenues up 31% year over year. Their other business segment in imagery, you can see they're up as well. So my big point with this company is this used to be a $60 stock about a year ago, and it is now trading around $5. This is a company that has relationships with governments, the U.S. government, the Canadian government, right? They work with military branches of these governments. Some of their commercial customers include Boeing, Lockheed Martin, SpaceX. Like, they're being priced like this. They're going bankrupt, and they're not going bankrupt. They're not going back to $50 either, but they're definitely not a $5 stock. So with that said, let's get again, full disclaimer. I've already taken a trade in this in the past, and I'm currently holding the position. One of my better trades recently. So yeah, when it made this all-time low here, I think it came down to like 476 or something like that. The next day it came back to test again. I was able to fill at like 492, somewhere around there. And first exit was here, 610. I think I bought back in like 630 on this day when it came back, or maybe one of these days, I don't know. And I sold it again around 7. I was a little nervous about earnings call going into it based on, a lot of chatter about the dividend cut, what impact it would have on their financials, the satellite going down. They're also going from they're going from IFRS to GAAP, which is a different accounting standard, and that is because they changed their headquarters again from Canada to America, and GAAP stands for Generally Accepted Accounting Principles, and typically that is a more stringent guideline as opposed to IFRS. So I was wary of those things. It did crash a lot. I might have got in a little too early. I got in the day. After they reported, or that morning, I got in like 554 right here. You can see the next couple of days, the market, that's when they rejected that 2800 area. I thought it was very market driven, so I held my position. Now you can see it made all-time lows 450s, and now it's looking to get above 520. I like it above 520. That's where I like it at. If it can hold this 520 area, I'm looking to add to my position for it to test this 580 area. Um, this could literally happen this week. Again, this stock got hammered quite hard. It's definitely not going back to 50, but it is not a $5 stock, as I was saying. Again, we saw who their customers are. You know, it includes the government, big commercial customers as well. And you can see this stock on the RSI, the Relative Strength Index, which is it gives you a gauge of, you know, the average price or the relative price for the last 14 trading days. You can see that it's just under 30, it's oversold. So technically this stock should be bouncing back from these levels on a weekly chart. And on the daily, we are going through that process of rebounding right now. So this is another stock that I really like. Again, it's not going back to these levels, I don't think, not anytime soon. But if we could just test this level here where it gapped up, I'll be more than happy to get those returns. So there you have it, guys. MAXR Technologies.